The Williams Fractal Indicator is a powerful tool for identifying key levels in the market. In this guide, we'll explore how to use it to build profitable day trading strategies. Williams Fractal is a simple but very useful indicator that helps identify key support and resistance levels. If a top fractal appears, it marks a potential resistance level. If a bottom fractal appears, it marks a potential support level. How is a fractal formed? A top fractal appears when the high of a candle is higher than the highs of the two candles to the left and two to the right. A bottom fractal appears when the low of the candle is lower than the lows of the two candles to the left and two to the right. An important note, a fractal forms with a delay of 2 candles, because the indicator only confirms after those candles close. The problem with the standard indicator is that it shows too many fractals, which can be confusing. On an active market, such as the 1-hour chart, you might see dozens of fractals, many of which don't provide reliable signals. The solution is to use a custom indicator, such as Williams trailing stop loss. It allows you to change the fractal range. I recommend disabling unnecessary lines in the settings and increasing the range from 5 to 9 candles. This helps filter out noise, leaving only the key levels, making your analysis cleaner and your trading decisions easier. What not to do? Beginners often use fractals as reversal signals. A bottom fractal appears, they buy. A top fractal appears, they sell. In practice, this strategy gives a low percentage of profitable trades and does not perform well. Instead, I recommend using fractals as breakout signals, filtering them with a trend using the 200 EMA. How does this work? Add the 200 EMA to define the trend. If price is above the 200 EMA, focus on top fractals for buying opportunities. If price is below the 200 EMA, focus on bottom fractals for selling opportunities. Wait for a candle to close above the last top fractal for a buy, or below the last bottom fractal for a sell. Set your stop loss below the entry candle for buys, or above it for sells. Take profit should be 1.5 times the size of your stop loss. Example 1. Price is above the 200 EMA, a breakout of the top fractal occurs. This gives us a buy signal. Place the stop loss below the entry candle, and set the take profit 1.5 times the stop. Example 2. Price is below the 200 EMA, a breakout of the bottom fractal occurs. This gives us a sell signal. Place the stop loss above the entry candle, and set the take profit 1.5 times the stop. Now you know how to use Williams Fractal as a breakout strategy. For more accurate entries, combine it with the Alligator and Stochastic RSI indicators. Start by identifying the trend using the Alligator. All 3 lines should be moving in the same direction and be separated. If all 3 lines are pointing up, the market is in an uptrend and we look for buy trades. If they are pointing down, it's a downtrend and we look for sells. Avoid sideways markets where the lines are crossing each other. Entry condition. In an uptrend, wait for a bottom fractal to appear while the stochastic RSI is in the oversold zone, below 20. In a downtrend, wait for a top fractal while the stochastic RSI is in the overbought zone, above 80. Stop loss should be set below the fractal for buys, and above it for sells. Close the trade when price reaches the alligator's middle line. Example, the market is in an uptrend, a bottom fractal forms, and the stochastic RSI is oversold. Enter a buy trade. When price reaches the alligator's middle line, close the position and take profit. You now have 2 effective fractal-based strategies. The first is a breakout strategy filtered by the 200 EMA. The second is a trend-following pullback strategy confirmed by the Alligator and Stochastic RSI. Both strategies are easy to apply and can be adapted to your trading system. The key is to be patient, filter your signals carefully, and follow risk management rules.